400 million billion schmillion up to now 600 flagillion schmillion billion. I'll let Uncle Joe take this away.
Somewhere between 700 billion and $1,300 billion.
Hey guys, Rafi here from the Endgame Investor. We got a lot to talk about today, a lot happening in the silver market, a lot happening in the palladium market. I'm going to bring those two things together. JP Morgan is selling a whole bunch of silver, 14.2 million ounces over the last 2 days, bringing them from eligible stockpiles to registered to sell against contracts. That's a total of 2,850 contracts of silver they're selling, and silver goes to delivery in 2 days. Palladium also goes to delivery in 2 days, and some whacked out stuff is happening in palladium. We're also going to go into the COTs in palladium, the commitment of traders report, which is which categories of traders are in what category. Are they short? Are they long palladium? You'll see these numbers are really, really unique. They've never happened before in history, and something is happening in that market. Today's video is brought to you by...
Hello, I'm George Liquor. American
alcohol. Well, specifically, a company called LQR House, which just debuted on the NASDAQ earlier this month. And why am I taking this sponsorship? Something I almost never do. Well, because I saw this article on Zero Hedge on the same day I was contacted about a sponsorship. August 28th, 2023, Biden alcohol czar says U.S. may change recommendations for how much beer Americans should drink. A U.S. federal official suggested in a recent interview that Americans may be told by officials that they are recommended to have no more than 2 alcoholic drinks or beers per week.
I guess they're trying to protect us all from beer, because that's the most dangerous thing going on in America right now. The Biden administration's health czar, Dr. George Koob, reportedly looking at urging Americans to drink no more than 2 beers a week. 2 beers a week?
And then I saw this picture of beer on Zero Hedge, and this actually happens to be my favorite beer brand. My favorite beer is Arrogant Bastard Ale, made by Stone. I think they're in San Diego. I barely ever get to have it in Israel when I sneak a beer in my luggage, which I didn't do this time. When I come back from the States, I haven't been in the States in 5 years, and I just got back. But I didn't bring any beer with me, unfortunately. But anyway, did you know that we had a beer czar and that he's going to tell us to drink only 2 beers a week? So here's the beer czar. He looks like, he looks like he needs a few beers. Looks like he has very, very straight posture for reasons that I could colloquially go into, but I won't. So anyway, LQR House. I just want to show you their chart first. They just debuted around here. August 9th, August 9th, it looks like. Their stock is pretty much consistently down since then, but now the stock has substantially fallen to a low of 91 cents. It is now at, 105. They are partnered with a company called Country Wine and Spirits, which is cwspirits.com, which made a big chunk of change during the lockdowns as people were buying a bunch of alcohol because they couldn't go anywhere. Their marketing strategy is to recruit social media influencers to push these brands on their channels, and that way they get around advertising regulations. So you see there are brands at the top of the page here, and hopefully their partnership with Country Wine and Spirits will work out. So my favorite beer is Arrogant Bastard Ale. Let's see if they have it here. Arrogant Bastard. Whoa, Arrogant Bastard Whiskey. Oh my gosh, I got to click on that one. $199.99. Now getting into the numbers on this company, you can see here that the first quarter of 2023 is $150,563, which is not bad compared to the $28,000 in revenue in 2022, first quarter of 2022. So they are improving, and we see here that the gross profit is now $47,000. That is way up from a gross loss of $284,000, $285,000 in 2022. First quarter 2022. So it's edging towards profitability, not quite there yet. We see the losses from operations is still there, and this is baby company, makes sense. It's your choice, obviously. You want to take the risk on this, but price being substantially down now from the IPO. There is another reason why this company is an interesting play right now, and that is this. This chart shows the short position in LQR right now, going up to August 21st. Which is one of the reasons why the stock has declined so rapidly since the IPO. There is a big short position in it, and they're making a lot of money right now. This is showing for August 21st, the short volume right now is 1.5 million shares. of a total volume of 3.7 million shares. That's 41% short interest. And if they can squeeze these shorts out, then the stock can bounce back up to maybe around where it was in IPO. I don't know exactly, but this is going to be volatile in the short term. So, keep that in mind if you want to take a risk on this. It would only be for retail amounts of money. Obviously, it's a very, very small market cap. So that and the fact that this company is being pushed by Dylan Mulvaney or some trans activist is also a positive. Remember back in the day when this kind of stuff was weird and you can make fun of it? Well, I do.
Dad, will you look at the tits on this guy? Dad, I'm real proud of you. Bob, this is my father.
Glad to meet you, Dad.
Dad was right. He had done what was right for him.
And so I'm not going to let a creepy looking beer czar tell me how many beers I can drink in a week. And, check out LQR House if you're interested.
To alcohol, the cause of and solution to all of life's problems.
The first thing we're going to talk about today is JP Morgan. They're up to something big. JP Morgan, over the last 2 trading days, Friday and Monday, has put for sale 14.2 million ounces of silver. This is their eligible stockpile. Eligible is not for sale. Now, keep in mind when you're looking at this, it looks like a huge pile, but 103.176 million of these ounces, of these 117 million ounces, 103.17 of them belong to SLV, so they cannot go for sale, at least not legally. We have here a stockpile of 117 million ounces, 103 belong to SLV, so that's about 117 minus 103 is 14 million ounces, a little less than 14 million ounces left that they could possibly put for sale in the registered category. That is less than the amount of silver they already put for sale over the last 2 days. They put 14.2 million ounces for sale. Why they put 14.2 million ounces for sale? Probably because they got to cover a big short position when silver goes to delivery over the next 2 days. Now look at this red line. This is where the supply is now. You can't see it here because I can't zoom in on this chart, but we're down here at the 117 million ounce mark, and that is below this low from July 2020. This is when they shuttled 30 million ounces of silver from the eligible stockpile to the registered for sale pile in July 2020, or right before July 2020, when those record amounts of deliveries are being made. This is the second biggest drawdown in eligible stocks to sale since then, second biggest ever, I think. So what I'm saying is JP Morgan is almost out of silver to sell. This is very exciting. Now we're going to move to palladium. Something even bigger is happening there, I think. So first of all, here's the palladium physical premiums I got from Gold Charts R Us. You can see here that they're at 14.1%. This is a high since the 2008 financial crisis. Now I want you to look at what happened here with palladium premiums. This was the financial crisis here, and palladium premiums, physical premiums, went from about 6%, it looks like 6.5%, to just under 30% in a matter of days. Now, what was happening to the physical palladium stockpile at that time? Well, we go to the next chart here, and right where 2009 hit, which is right where that, this is not to scale, right? Because this is a different length of time here. I can't really adjust these charts. So this is where that huge premium spike happened. And you see here that the physical stockpile went from down about 100,000 ounces, right? That little, spike down here. That was encouraged by the spike in premiums. And how many ounces do we have now? Here we have the palladium commitment of traders. The red guys are the non-commercials, the speculators. They're almost always long palladium because they're speculating on the price. They go long. And the commercials meaning the producers of palladium and the bullion banks, the swaps, the market makers, are almost always short. They're almost always in the bottom in the blue. Except now, the situation is reversed. You see here that now the blue is on top, the red is on the bottom. This almost never, ever happens. It means that the commercial palladium producers are now long palladium. Why would you be long the metal that you produce? And the speculators are short palladium. And look at the price of palladium since this reversal happened. It's been going down and down and down. The hedge funds, the speculators in palladium futures are now short palladium to a degree that they have never, ever been, going back all the way to 1985 when palladium futures began, or at least the COTs for palladium futures began, and we began recording who was what. So when did this last happen? It happened in the mid-90s. You see here, you can barely see it. The red is on the bottom here and the blue is on the top, just like it is now, but much more extreme now than then. And in that time frame, what happened was a huge palladium rally. Because look, if the speculators are short and the producers are long, and the producers have every incentive to hold for delivery and force the speculators to deliver on palladium that they don't have. And that creates a palladium price spike, and it's good for the producers because that's what they produce. Right. And I'm going to show you the situation now leading down to 2 days until palladium delivery. These are the last 3 days in open interest. And open interest in today's and this current spot contract, which is September, goes to delivery in 2 days. Today is August 29th. We had 5,437 open. This was Thursday, and 2,900 closed. Now, on the next day, we had 2,900 left open and 2,500 closed. And now we had, this was Monday, the latest available numbers. We had 2,100 open, only 837 contracts closed, meaning the rollover to the next contract, the next active contract, which I think is December, has slowed down. There's 2,100 contracts open and only about 347 contracts available for delivery by the physical palladium stores in the COMEX. This is getting down to the wire, and we could see a short squeeze. I'm not saying it necessarily will be, but yes, I am long palladium in preparation for this because I think the price is low anyway. Now we look at the gold COTs. Same here. The reds are the speculators and the blues are the commercials. We see here the last time that the reds and the blues flipped. When was that? Ooh, look at that. February 2001. Remember February 2001 when gold hit a bottom of $253, and that was the all-time low that we'll never, ever, ever see again? Well, that was February 2001, specifically when the red was on the bottom and the blue was on the top, meaning the speculators were short and the commercials were long gold, and that was the ultimate bottom. We saw a very similar situation almost where the red and the blue switched. Not quite, they didn't, but it got very, very close during the 2015 gold bottom. And here they switched for maybe a few days during the 2019 bottom, indicating that it is a major bottom, very likely. I'm not making any recommendations. I don't do that, but I am personally long palladium for my own personal reasons. Now let's talk about Turkey. This is the month-to-month consumer price inflation indicators or index, whatever, in Turkey. And looks like we're heading back into a new round of hyperinflation. We had the last round here. Consumer prices were up like 15% a month. They're back now. I think this is 9.6% a month. So yeah, we're headed into a new round of what looks to be hyperinflation in Turkey. And this round is probably going to be even worse than the last one. This is how hyperinflation works. It goes into waves until the currency is dead. And why can't they stop doing that? Because, well, look at the Turkey central bank balance sheet, right? It's going vertical, and it's going even more vertical now in 2023. Why can't they stop? Why do they keep printing money and expanding their balance sheet? Because that's the nature of hyperinflation. It cannot be stopped. It is irresistible.
It's so delicious. You'll eat until you explode.
It's like a junkie that needs higher and higher and higher doses, and there's nothing you can do to stop it. And what is the Turkish central bank's balance sheet at now? Is 400 million billion up to now 600 flagillion trillion billion. I'll let Uncle Joe take this away.
Somewhere between 700 billion and $1,300 billion.
And now we see that Argentina, going to Argentina now, is trying to fight its own hyperinflation with a hike in interest rates. This is a historical chart of Argentinian interest rates going back to the early 1980s or maybe late 1970s. We can see here that interest rates do not stop hyperinflation. It doesn't matter how much you hike them. Once the hyperinflation kicks in, interest rates don't matter. They can't stop it. So we see here in the late 80s, early 90s, the Argentinian central bank hiked rates to 1,400%, did nothing. The currency died anyway, died here in 2000 with this hike, and it's dying here again with this pathetic little hike to what, 100%? Who cares if it's 100%? If it's hyperinflation, the interest rates do not matter. Going to silver. Silver is pivoting off of a historic support zone going back to 2020, and it goes back even further than that. We'll go to that in the next chart, but that's 22.25, and that is exactly where the 50-week and 50-day moving average, 50-week and 200-week moving averages are now, or just around them. 22.25, we see that support zone being hit here once, twice, 3, 4. This could be 3, so 3, 4, 5, 6, 7, 8, 9 times since 2020, and we have bounced strongly off it. We're now even higher than this. I think we're on $25 or something, maybe 24.5. Don't know exactly, but if we go to the next chart, we see that this support zone is even bigger than what we see here. Going back to March 2008, it's been bounced over here. This is the recent bouncings that we saw in the last chart. Here, it was the high in 2008. It was the point that started the parabolic run to $50 in 2011. Once we broke through that, silver just went completely vertical. Here it was a resistance zone, and here it is support once again. This is a major zone here, and if this is conquered, we might never cross it again. Once again, I'd like to thank my sponsors for this video, LQR House. Check out their stock, follow it if you're interested, and we're not going to let any beer czar tell us how much beer to drink. And if you're in the States, pick up an Arrogant Bastard Ale for me, and I'll drink it vicariously. This is Rafi of the Endgame Investor. If you enjoyed this video, then sign up for a 2-week free trial of the Endgame Investor or become a patron on Patreon, where I talk about the divine angle to these concepts, which can be very helpful to those that are in a bind and don't know what to do or think about. I'm a very spiritual man.
I can't stop eating this delicious ooze, but I'm not gonna let you die.